Good morning, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures on a beautiful day in Chicago, January 11th. It is 50 degrees here in Chicago. Very unusual for January temps. But let's get down to business here. As you know, I talk about the energy markets with a focus on crude oil. So give me a call. You want to talk a little bit about that. And be sure to check out our 2013 Outlook. I'm part of one of them there. There's a two-part series there. Very informative, some great outlooks, myself and some of my colleagues here in the office. So be sure to check that out. So what do we have going on here today in the energy market? Well, crude prices here, let's start off here with a little bit of yesterday's action here. Crude prices here really making a push higher there. Now, we've talked a lot about the chart formations and stuff, and that crude has really been on a move higher. And yesterday was a little bit of continuation to that, but take a look at the chart here and the resistance levels that we're seeing up there. Kind of went and poked up on that here, looking at highs that we've seen here back in November. And that market kind of came down here, so a bit of a reversal. And part of what was driving that, and this is something that, check out my earlier post, I had mentioned that traders were going to watch that manufacturing data coming out of China. Came out better than expected. That kind of really set a lot of markets on fire yesterday, with prices really taking off here to the upside. Now, let's take a look at some other data that we had come out of China, and that was some of the inflation data, much higher than expected. And that's kind of causing some of these markets to retrace today. Why, you ask? Well, simple. If inflation is higher than expected, there is a smaller probability, less likely, that there's going to be additional stimulus, i.e. cheap money, basically put to work in these markets. And we all know the markets love cheap money. So that's kind of the idea here. So we're seeing a little bit of risk taking coming off the table. So right now this morning, we've got that February crude trading about 93.05. We're only off about 77 cents this morning. We have dipped a little bit through 93. The low we saw though here this morning has already taken out yesterday's low. So I think we've got a little bit of reversal going on there. Brent even weaker right now. That's down around $1.61, trading around 110 and a quarter here area. Nat gas bucking the trend. Nat gas is up about 2.3% roughly. We're up about 7 cents, trading around 326 and a half. The complex here quite a bit weaker though. We've got the RBOB off almost 6 cents, trading around 273 and a half area. And the heat also weaker. That's off about 4 1/4, trading here right around 301 area. So, you know, again, I think what you're going to see, and this is something I mentioned in my other post here, we haven't seen a lot of money really coming off the table yet, but I think the market is in store for some profit taking. You know, you look at our stockpiles here, look at the DOE report that came out here. We saw another build in the stockpiles there. So I think that was obviously just adding to the build that we already have there. We did see, you know, last week's number. A lot of traders are commenting about last week's number and such a large draw we saw there, 11 million barrels. Well, here's the thing you got to remember here. Those numbers are a week, you know, based on the previous week here. And what a lot of those numbers reflect there is, you know, the end of the year numbers here. And I think, you know, when you look at those stockpiles and stuff, that there's some maneuvering that happens there to show those inventories come down here for accounting, tax purposes, etc. So I think you got to take that into account. And I think that's one of the big reasons why we didn't see the market explode on that news, because most informed traders knew kind of what was really going on there. So if you'd like to be included, and you should really be looking at those numbers on a weekly basis and understand how to interpret that, give me a call, shoot me an email. I'll be more than happy to help you out with that, as well as some other strategies. So, you know, I think, you know, we should be looking for oil prices, not necessarily today, but I'm looking for to see a little bit further pullback in there, heading down towards that 91.50 area, and then we'll kind of reassess things. We could see a pullback into that $90 area, I think, here sometime into next week or the week after. So give me a call. You know, we can discuss some different strategies, some risk management strategies, some different ideas for taking advantage of not just the oil market, but if you have some interest in trading the spreads, or if you want to take a look at nat gas, you know, get a lot of interest in that market. There's some great opportunity there. We can talk a little bit more in details, or the complex. So give me a call. If you'd like to discuss that, we can get into a little bit more detail. My number's on the screen, my email's on the screen. You know, I've been doing this now for about 16 years. So, you know, you can kind of piggyback on some of the experience that I have here and get some additional market commentary and color. Of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck, good trading. Have a great weekend.